Today, we'll review recent moves by 4 Tesla institutional analysts who are bearish prior to the Robotaxi event, and stay tuned till the end when we'll reveal the list of institutions who voted against reinstating Elon Musk's compensation plan. After seeing a majority of analysts raising targets for Tesla stock one after another, it's time to see the other side's position. The lower the expectation, the better as far as I'm concerned. First, we've got a video from Guggenheim Securities, who doesn't see a real, credible path to robotaxi commercialization in the next 12 to 24 months. Second, RBC Capital did something quite odd. They raised their price target to $236 and an outperform rating. Never mind that the stock is currently much higher than this. Third, we've got Tony Sacconaghi from Bernstein, a perpetual bear. Fourth, we have George Gianarikas from Canaccord. We'll end with a list of brokers who don't support Tesla, and I hope you'll decide to move money away from them. We've got Hans Nelson joining us. Hans has his own YouTube channel at Hans C. Nelson. Welcome, Hans.
Thanks for having me, Herbert.
We have a number of videos to show you. I think it's important that we actually show the bears and the people who have muted expectations for Robotaxi, because the last 2 weeks, it's just been one after another, very, very positive, and the hype is real. So it's good. Let's take a look at what the other side is saying. So first, we've got Guggenheim Securities. Looks like it's Ronald Josico. We think that a real credible path to robotaxi commercialization in the next 12 to 24 months is extremely unlikely. So that's great. Let's watch what he says here.
It's a big week for Elon Musk. Tesla is hosting its long-awaited Robotaxi event on Thursday. The build-up to the event has sent shares of the EV maker higher in recent weeks, following a general slowdown in EV demand seen earlier this year. Joining us now with his insights, we've got Ron Jevsikow, who is the Director of Automotive Equity Research at Guggenheim Securities. Ron, great to have you on here with us. So, are you expecting a boom or bust when they make these announcements this week?
Yeah, I don't know if it's that binary, but we do expect it's more likely to be a sell the news event. I think there's been a lot of hype into this event. We've seen the stock move up. Investor expectations are quite high in terms of the promises that are going to be made at this event and the products that are going to be shown. So I think ultimately there are a lot of boxes that have to be checked, and we think that a real credible path to robotaxi commercialization in the next 12 to 24 months is extremely unlikely to come out of this event.
Ron, when you take into account how much has already been built into the price that we're seeing today, you mentioned so much of that hype. You mentioned the fact that investors have really been bidding this name up before the announcement. I'm curious, what do you think will be enough to trigger that sell-off? And you've got a price target of 153. I guess to what degree, or what is it going to be that really shifts investor sentiment to get us lower to that price?
Yeah, it's a good question, and one we're asked quite a bit. I think it's tough to have one catalyst that triggers, I think, our view towards the stock returning closer to what we think is fundamental value. But I would say that a business trading at 100 times earnings, 100 times our next year's earnings, with little to no free cash flow, is really difficult to underwrite without the Robotaxi. So I think post this event, you do get a return to focusing on the fundamentals of the business, which remain quite poor. We estimate U.S. sales were down about 5% in the third quarter versus the second quarter. And while China growth was quite material in the third quarter, I guess we will see the quality of that growth once they report 3Q earnings with the gross margin line item. But it's tough to have any single catalyst from this point, but ultimately, even comparing Tesla to the other Mag 7 stocks, the free cash flow disparity is enormous, and the free cash flow yield disparity. So it's a really tough stock, I think, to underwrite fundamentally.
Ron, if we continue to see more consumer pressure right now, and especially as it translates through to auto purchases and the mindset there, what do you think that translates through for Tesla in the margins that investors have come to expect, especially even if they're adding on certain packages to their automotive experience? And what does this company need to do to ultimately generate demand for some of those more premium offerings?
Yeah, I think, for lack of a better term, I think the premium offerings are almost X growth at this point for Tesla. We've seen the Cybertruck grow, but it's largely been a function of cannibalizing Model S and X sales. If we just look at Tesla's sales volumes for premium vehicles, I think to see the gross margin inflection in the next 6 to 12 months is pretty unlikely. And I think it's important to know where we're coming from. Margins were 30% if we rewind the clock 2 years ago, gross margins. Today, we're sitting around 15%. So even if we marginally inflect higher, this is still a stock trading close to 100 times earnings. I think you need a material step function change, and there's nothing in the demand outlook that would support such a step function improvement in demand.
Okay, so you can see he's clearly focused on just the numbers, looking at next year's PE ratio, not counting at all. It doesn't believe that Robotaxi is going to contribute, doesn't even believe that any margin contribution. He says it has to be pretty material for it to even change his mind. So what was your reaction?
Yeah, I mean, I would point out that, first of all, he's not a technology investor. He is an automotive investor. And this is kind of the classic analysis that you would expect from an auto analyst. And this is Cathie Wood's specific critique of how the auto analysts typically view and think of Tesla. And, right now, I think we're in a phase where it is still yet to be determined in the financials whether Tesla is an auto company or an AI company. But if you're not looking at the financials, which are lagging indicators of Tesla's performance, but instead you're looking at some of the leading indicators of Tesla's performance, and you realize that a lot of the money that is not being allowed to flow through to the bottom line as earnings, and it is inflating the PE, is actually being invested aggressively into AI infrastructure. And so, yes, Tesla's investing aggressively, but they're keeping up with the likes of the Mag 7 in AI type investments. And the market overall thinks that they're more likely to be able to generate long-term cash flows, not necessarily today, on the back of those AI related investments. And that's obviously not their view, at least not in the next 12 to 24 months. And from their perspective, I understand their skepticism. I just disagree personally, because I think that while I think that, like, there's the skeptical side of me that has heard what the timelines are going to be for Robotaxi, for the past 6 years. That side of me thinks, man, there could be unknown unknowns that really do push us out another 12 to 24 months in execution of actually getting paid rides on the Robotaxi at scale. The other part of me drives 12.5.4 today, and it feels like it is so close. And I just have a hard time imagining what those unforeseen scenarios could be that really do push us out beyond that 24-month time horizon.
Yep, there you go. That's exactly what I think it is. It's like different people have different expectations and different time frames, right? So you've got people like ARK Invest and other bullish investors who believe that the next 5 years we're going to see Robotaxi. In fact, ARK Invest says within the next 24 months, there's a 96% chance that Tesla will roll out some sort of, even if it's just one city, some sort of commercialized Robotaxi event. Why wouldn't that be able to happen? They can do that today. They can copy Waymo if they wanted to today. Waymos are doing it now. And so I just don't understand how these people can be like, it can just be one city. It doesn't have to be national within 48 months. Yeah.
He would push back on that definition of commercial
wants to see
Robotaxi. He would probably say, it needs to be at scale or something like that. And so, those kinds of differences in interpretation of the meanings of those terms definitely produces conflict around the stock.
It's very simple for him. Here's how much earnings is. Here's what the stock price I'm going to forecast. Here's what it's pretty straightforward. Dan Ives, I just interviewed him, and he was funny because he's going, these are the exact same people that said the exact same thing when Apple was a hardware company, and then they were announcing they're going to be a software company, or NVIDIA said that their AI is coming. That's the difference. Okay, that's Guggenheim.
Yeah, and NVIDIA is a good one, because it was only 2 years ago that people were just like dogging on NVIDIA because of the amount of like, it was the exact same argument as like, they're investing too much and there's not any near-term returns on these things. And then 2 years later, all those people look like fools. And it was because they were investing heavily in AI, which is a go big or go home business. Like, you don't invest a little bit and succeed in AI.
And CERN and I did a show where CERN showed the PE ratio of Tesla and NVIDIA. And he showed how the PE ratio, if you looked at it 2 years ago, and the same arguments, well, the PE next year Ford is like, it's pathetic. And then, of course, that's not what happened, because these guys don't care about technology impact to earnings. Now, he's saying, I don't see it. I don't see it happening. That's fair. He doesn't think it's going to happen 48 months. then that's his opinion.
Those that don't believe, I would just refer them back to Tesla's history on return on invested capital.
There you go. All right, well, let's take a look at the RBC. This is very interesting. I just explained to me what they're thinking in their heads. RBC lifts Tesla's stock price. Okay, so they actually raised it because of the robotaxi business potential. So they raised it. They raised it to $236 from the previous $224, and they maintain an outperform rating. What's confusing to me is that the current stock price is much higher than $236. So what? But anyways, they raised it from 224 to 236. Anticipation of Tesla's Robotaxi Day, an event that the firm believes is significant due to business potential avails. This is, I think, the other common theme from these conservative analysts. So there's the bears, like we'll see a couple of them. And then there's guys who are like, yes, I believe in Robotaxi, but not till 2040. And only because I'm seeing everybody else raise their targets, I better raise mine. And because the price jumped over mine, I better raise mine. That's the only logic. For the first time, it will highlight a business that represents $153 billion of revenue for Tesla, 63% of our valuation. So they're counting it in, but they think it's built in, I guess. They think Robotaxi is already built in. It's rooted in the expectation that robotaxis could generate $1.7 trillion in global revenues by the year 2040. RBC Capital analysts pointed out is expected to be competitive, there you go, with various players sharing the marketplace. So they think, yes, it's going to happen, but everybody's going to do it. Fleet operators, application providers, car manufacturers, and software developers. The firm underlines the importance of this market. Revenues from robotaxi would likely come with much higher margins compared. So there you go. That's RBC. What do you think?
I don't know. It kind of reminds me of the type of person that says, I love you, but can we also still continue to see other people? Like, I don't know. It just doesn't make a whole lot of sense.
That's all you got to say about that one?
Yeah. I mean, the one thing that I would add there is if you look back at history, the first mover who has the cost advantage and the right technical solution is much more likely to be the Apple position in the market than the Android. All those followers, they're going to be, trying to pick up the breadcrumbs. And the only way that you believe that Tesla doesn't just clean house on robotaxi revenue is if you believe that they're not first, and that they're not able to really achieve the advantages of scaling and network effects through their low cost, high performance solution. And if you don't believe that they're going to be able to accomplish that, then, I don't know what type of robotaxi world that you imagine. Like, it's not one that seems likely to exist in my mind.
I think a better comparison is not actually the cell phone market. Because this is a network effect. The better comparison is the actual ride-hailing market. Uber and Lyft and all the others that are trying to get a niche. Uber has 85% or 70, 80%. Lyft has 15% of the market, despite them offering exactly the same product, exactly the same pricing. There's no difference.
Yeah, the difference for Uber and Lyft effects. The network effect part is true, but the difference is that Uber and Lyft fundamentally have the same cost structure, and so they're having to compete solely on network effects, really achieved through giant piles of VC cash that gets lit on fire in order to competitively steal market share. Whereas if you have to have $150,000 vehicle to be a robotaxi compared to a $30,000 vehicle to compete as a robotaxi, like those are fundamentally different.
But what I'm saying is,
or cost structure.
There's gonna be one big winner, and then maybe if there's a second, it's winner takes most. And then if there's a second, they'll get 15%, and then the rest get nothing. But in your point is that if that second somehow is able to figure out a Tesla model where they're able to offer lower unit economics as well.
Yeah, well, just that there's no one, there's no way for someone, even if they're the first to market, to maintain that position as first in the market if their cost structure is not competitive with Tesla's cost structure.
Okay, interesting conversation. Thank you for the analysis there. So let's watch the next one here, which is our friend Tony Sakanagi. He is just been bearish on Tesla forever. We've shown his long term always he's like really low, but the funny thing is that if you look at for the last 8 to 10 years, he's never been right. And so at some point you got to start thinking why you think this way. But his position is just what we're talking about here, which is he actually thinks that Tesla is not going to be able to leapfrog Uber and Waymo. They're just too far behind. So that's just a totally different perspective. Let's take a look at it.
Joining us right now is Bernstein Senior Research Analyst Tony Saganaki. Good morning to you. What do you expect we're going to hear? We've been waiting for this news for a long time. I think it's exciting to many, but also for many, there's some skepticism about when it will actually arrive.
Good morning, Andrew. Yes, I think the consensus is that Tesla will announce a dedicated robotaxi model, likely to be available at some point in the future, let's say 27 or 28. That Tesla will demonstrate a application whereby a ride-hailing app that it will provide some kind of update on where they are on full self-driving, and maybe also potentially announce that it's doing some robotaxi trials. I expect if they did that, those would have to be with an accompanying driver, but nevertheless starting trials in one or more cities in the U.S. I think that's generally what's expected amongst investors. There are big questions about whether Tesla will provide updates on Optimus Robot or whether it will provide an update on new models, particularly, the revamped models expected early next year or a lower cost model expected in 27. But I think the focus will ultimately be on a robotaxi unveiling itself and an accompanying ride-hailing app.
So, Tony, we're looking at the stock now at $242.90. If, in fact, they make this announcement, how does this change the game? How does this change how you would value this company?
Well, I think investors are applying different probabilities and discount rates to a robotaxi service going forward. And so I think it's widely anticipated, but as you noted at the outset, there are lots of questions. There are technical questions about whether Tesla can get to the reliability level with a more limited sensor suite. They only have cameras. Other competing autonomous vehicles have LiDAR and radar, so there's a technical question. I think there's a regulatory question. There's a timing question. And, how competitive is this space going to be? Are prices going to be driven down, and how much value will there be to be captured? So investors are ascribing different probabilities and timing to these scenarios.
What probabilities are you ascribing to those things, and how are you doing the valuation then?
Well, here's how I think about it, Andrew, is I think it will be difficult for Tesla to leapfrog existing players. Uber, Waymo, and others are doing level 4 robotaxi service today in multiple cities. Even if Tesla is able to leapfrog, I think it'll be a limited year advantage. So let's say in a year, Tesla has level 5 robotaxis. They can go anywhere. They have a ride-hailing service. My guess is competitors are going to catch up reasonably quickly. So this notion of having sustained outside profits, even if Tesla were to leapfrog given the technical hurdles and the regulatory hurdles, I think are difficult. And the valuation of Uber is $150 billion. The valuation of Uber, probably in the U.S. is half of that, $75 billion. Tesla stock today embeds, we think, $600 billion beyond the core auto business, much of that ascribed to robotaxi. So we struggle with that differential given the probabilities that I outlined.
But let me ask you this in terms of just the competition piece of it, which is to say, you made the argument that you think that Uber and a Waymo will have an advantage, maybe given LiDAR and other things, over Tesla. There is an argument to be made, and maybe you'll disagree with it, which is that they have a number of they have thousands, tens of thousands of these cars on the street today that have cameras on them. They're taking in data that can't really be matched. If you look at some of their self-driving features right now, they clearly seem to be the leader or the most advanced in terms of where that would be if you were to sort of set aside what Waymo is doing. is there an argument to be made that they will leapfrog everybody and that they, in some ways, already have?
Well, I think the bull case is they will leapfrog. I think it's very difficult to say they already have because Waymo is doing 100,000 rides a month right now with essentially a perfect safety record in multiple cities. Tesla's nowhere close to that.
Yeah, Tesla's Waymo 700 cars, and Tesla's going to have millions, not tens of thousands. Yeah, what's your reaction to what he said?
Yeah, I mean, well, here, one of the questions I had for you is I was listening, my mind went on a side trail and I missed, it sounded like he said just 2027, there's eventually going to be a new low cost model, which is, I'm
27,
assuming
28.
that,
He's not expecting it to come earlier than that.
which would be the full like $25,000 model. But he completely didn't say anything whatsoever about the new low cost models that Elon said are coming in 2025. Like he just completely writes that off.
Mm-hmm. Yeah, he does not think that.
That's what I thought that I heard.
You're right. He just refers to Robotaxi as being the Robotaxi model, not any of the regular cars can do this.
So here are a number of the places where I would just disagree with him. One of them is that saying that $600 billion of Tesla's valuation are ascribable to Robotaxi and not to the core auto business essentially assumes that the auto business is not going to grow, which you would have to assume that there's no low cost models coming next year in 2025 in order to say that we're just, flat as far as the core auto business for the near term future. And I disagree with that. I think that Elon and Tesla will deliver new models in 2025. I don't think we're going to hear anything about those new models of significance tomorrow, or not tomorrow, on Thursday. But I believe that is something that's going to happen. And so, first of all, I would disagree with the valuation metrics he's using for the core auto business. Second of all, I would say that it's really hard, in my mind, like I said, going back to our previous conversation, to believe that if Tesla, you can't believe that Tesla is going to achieve level 4 performance on par with Waymo and these other companies, and that they will not just gobble up market share because they have the vehicles to do it and they have the lower cost structure to do it, going back to what we talked about earlier. Like all of these cars that are already on the road that just need a software update, like if the hardware 3 and hardware 4 cars with just cameras and computers are capable of Waymo functionality, you instantly have a fleet of millions of vehicles that are capable of providing that service that are already on the road that you don't have to spend a single additional cent to bring into operation. Like that is not a world in which all of a sudden magic competitors just start to have other fleets of millions of vehicles on the road. And that's just, the fundamental difference in the way that he is valuing the opportunity for Robotaxi and many other people.
Oh, brother. It's good to hear from these guys, what they're thinking. I was just looking up Tony Sakanagi and what he was saying about Apple, the iPhone. And, guess what? It's exactly the same thing, right? It's like what I'm hearing today is exactly this. He's going, don't you know that Nokia already has a significant market share? I just don't see iPhone coming in and displacing them.
Having a durable advantage, over BlackBerry. Yeah, that's exactly what I was thinking about when he was saying that. And I'd be curious to hear what did he have to say about NVIDIA 2 years ago? I'll bet you it's once again completely similar.
But I like the way you positioned the very first one, which is these are auto kind of they're not tech. They're not tech people.
Yep.
Anyways, that's a good, no. You know what? That's our opinion. That's his opinion.
And it's obviously, not
good.
Not all of the analysts or participants in the market are tech people. And so it's, 100% understandable and to be expected that different people with different perspectives assign different probabilities and therefore different valuations to the stock. And that's why there's a market, and the market is what decides on the pricing. And right now the market disagrees with these types of people on the future valuation of Tesla. Can that change? Can sentiment shift in the next 12 months, and be very volatile up and down as we've seen since 2020? 100% it can be. And in fact, I kind of expect that. I think we're going to be we could be anywhere between 150 and 350, and maybe hit both of those targets sometime between now and 2026.
Yeah, very good points. Okay, let's move on to the next guy here. We've got George Gianarikas, and let's listen to what he's saying.
The skeptics keep bringing up that this is taking place on a closed road, a closed course, on a movie studio lot. How much promise do you see in real-world delivery of either data or demonstrations?
Look, the skeptics are right to be skeptical in the short term. There's something that Tesla has to deliver to safely have vehicles, autonomous vehicles on the road without a driver. And that's something called mean time between failure. And companies are trying to get to something that's equivalent to 10 to the 7th power, which is better than a human driver. And because Tesla's taken a controversial approach with just a camera and a massive AI infrastructure, people, including ourselves, are skeptical that they can make that happen in the near term. Over the long term, we'll see there are competing companies like Mobileye who are trying to enable vehicles to get to that mean time between failure, and also an autonomous trucking company called Aurora that's trying to get there. But they take different approaches. They're using multiple sensors, and Tesla's decided to use just a camera, which is interesting. We don't think they'll get there in the near term, but I think most people expect that.
Do you have any sense as to how the stock may trade going in and out of this event?
It's a great question. I mean, look, my sense is that expectations are pretty low, and I think there may be some sort of wow moment when at the event where they show that they can leverage this massive AI infrastructure they're building to animate and give life to robots. Because the title of the event is called We Robot, and that obviously doesn't just include Robotaxi. So I expect that they'll show that all the NVIDIA chips that they're buying, these massive data centers that they're building, they're going to use that to enable a robot army of workers as well.
Is there regulatory risk to worry about here with this future?
I think, well, from an autonomous driving perspective, certainly, because I think that over time, as regulators dig into the algorithms that enable the autonomous vehicles, they're going to want to know exactly why cars made decisions that they're making. So when you have a massive AI infrastructure that doesn't have software, hard-coded software rules like other companies are trying to follow, and God forbid there's an accident, well, they're going to want to know, well, why did the car make this decision or that decision? And based on, at least what we can tell, based on the infrastructure and the software and the AI that Tesla's building, it's very hard to know why their version of Robotaxi made decisions that it's making. Now, other companies that we mentioned, Mobileye and Aurora, there are hard-coded software rules that let regulators and people know, well, if a company did this, if a car did this or that, they can understand the decision-making of the vehicle.
Hey, finally, George, we always like to ask what portion of your price target on Tesla accounts for just the core auto business?
It's a great question. So what we've done with our model so far is we assume that there's going to be a ton of margin improvement over the next several years, 4 to 5 years. And that's based on people adopting full self-driving on traditional Tesla vehicles at an increasing rate. That's going to significantly help margins over the next 3, 4, 5 years. In addition, in terms of Robotaxi and robots, we don't have a lot built in right now because, frankly, we don't know when this stuff's going to hit the road. We're pretty skeptical in the near term that Tesla could have a robot or a Robotaxi army, call it in 2 or 3 years. It's probably going to be later in the decade and in the 2030s. And our model goes out into 2030. Just for now, we're building in increasing FSD take rates and a reacceleration of their auto business.
Yeah. Okay, that's great. So, actually, I like this. I like it when an analyst says we're going to be muted going into the Robotaxi event. That's better. That's better for all of us. I think that's the good way to go. And then he's actually pretty conservative. He's just saying, hey, just FSD take rate. I don't buy into the others. That's fine. This is what Dan Ives was telling me just a few days ago. He was saying that that's conservative. That's an easy way for people to dip their toe in. And that's great. Yeah.
Yeah. I would agree. I would say I understand where he's coming from. I think that the thing that people taking his position really are discounting is they look at the sensors as the most important piece of the solution to the driving problem, and they miss the fact that regardless of what your sensor suite is, the intelligence that is using the input from those sensors to make decisions is an incredibly key factor. And the thing that Elon has gone in all in on is let's solve the intelligence piece of the software. And that's just not going to be possible in a hard coded system that he thinks is going to have advantages when it comes to regulatory scrutiny. I just doubt that, because I think that a hard coded system is never actually going to reach those mean time between failures targets that he's talking about, that it's going to have to be a neural net solution in order to achieve those targets to begin with. And then if that's the case, then the only way to win the argument with regulators with respect to safety is you have to show them safety at scale with lots and lots of numbers.
All right. Final story here, I think is very important, is which brokers actually voted against the 2008 vote on Elon's pay package. Alexander Mertz and a team helped put together this massive effort to show you this. The results are out based on the SEC filings of institutional investors' proxy votes, both the 2018 and the 2024. Here's the table. So you see here the list of brokers on the left and how did they vote against or for. You can see Vanguard originally 2018 voted against. Now they said for. BlackRock against. They said for. This is great. And actually what's interesting was we thought that there was a lot that was going to say for in 2018, and then now they say it against. We don't actually see that. But except for, like I say, Franklin Templeton did that. But anyways, anyone that says against in 2024, they did not support Tesla. They did not support Elon Musk. And we're here to asking people that if you have your money in any of these guys here that voted against. So this is State Street, Franklin Templeton, Goldman Sachs, Schwab, right? ProShares, Victory, Global X, Dimensional, Putnam, Principal, Valak, SEI, Legg Mason, Sun America, Gerber, Kawasaki. They all voted against. Pull your money out of there. Move it to a company that is this is something that it was already proved in 2018. Now they're going to vote against it. So they just have no honor. And the people that we should thank are these. The project was a monumental undertaking involving all of this work that they had to do to put the scale of this task into perspective. The London Stock Exchange employs a team of over 5,000 people to perform similar work. So this is how much work that they had to do to get this done. And the people to thank is Joel D. GM, Jeffrey R., Sexy Future. These guys really helped, along with Alexandra, of course. So, final thoughts on that one.
I'm just super impressed by Alexandra's ability to put together information like this. She's obviously a huge asset to the Tesla community and really, really, really has done an incredible amount to help the mission of Tesla overall with her very unique set of skills. So massive kudos to her, massive kudos to the other team of people that helped her assemble all this information. And then, if you're an investor and you have holdings with any of these institutions, now you have an extra piece of data that you can use to decide whether or not you want to keep your money with them or move it. Most of my holdings are in Fidelity, and so I don't necessarily need to move them based on the data that she's provided. But I don't know. There's part of me that always wants to get out of Fidelity anyways, just because it's kind of large and cumbersome.
Mm-hmm. Thank you so much, Hans. So just announcement here that this Thursday, we're holding a very big live stream. We're going to cover pre-show. We're going to go right to the full live stream of We Robot and the post analysis. And Scott Walter and I and Brian Aza will be co-hosting this, and we are going to be live. We're going to be right on in the actual, it's the Warner Brothers Studios, and I've actually been invited now. I finally got my invite, so appreciate everything. I got lucky and I won a lottery to get in, and thank you everybody. So please join us Thursday at 4:30 p.m. Pacific time. All right,
that'll be awesome
everybody.
with Scott in the commentary, having him on that show.
Because it's about bots. And we're going to be interviewing both analysts and retail celebrities right on live on set. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.